Happy Monday, everybody. Today is June 15th, 2026, and this is your Monday market update. Hope everyone had a great weekend. Last week felt like investors were trading every headline coming out of the Middle East. One day, markets were worried about the renewed conflict with Iran. The next day, they were celebrating reports of a potential peace agreement. Oil prices swung sharply. Inflation data took a backseat at some times. And by the end of the week, the largest IPO in history had everyone talking about SpaceX. Through all that volatility, the major indices still managed to finish the week higher. Stocks began the week on a positive note as investors stepped back into many of the technology and semiconductor stocks that had been hit hard during the previous Friday's sell-off. Geopolitical tensions did remain elevated as after another weekend of military exchanges involving Israel, the United States, and Iran, of course, but investors viewed that situation as no more worse than feared. Comments from President Trump urging Israel and Iran to stop shooting and indicating progress towards a ceasefire helped to calm nerves and encourage dip buying across technology and AI-related stocks. The market did give back some gains during the afternoon after New York's Fed's Consumers Expectation Survey revealed rising inflation uncertainty and weakening confidence in the labor market. Treasury yields moved higher throughout the session, creating a headwind for stocks, of course. By the closing bell, investors were cautiously optimistic that diplomacy might eventually prevail in the Middle East. The Dow fell about 0.25%, S&P gained 0.25%, and the Nasdaq rose nearly 1%. On Tuesday, markets initially moved higher as oil prices fell below $90 a barrel, increasing optimism that a peace agreement between the United States and Iran could be finalized. Technology stocks received an additional support from reports that Apple was making significant progress in its internal artificial intelligence initiatives. However, sentiment shifted dramatically after reports surfaced that a U.S. military helicopter had been downed by Iranian forces. President Trump vowed retaliation, triggering a broad risk-off move. At the same time, stronger than expected existing home sales reinforced concerns that the economy remained hot enough to keep inflation pressures elevated. Markets recovered some losses later in the day after reports suggesting that incident may have been unintentional and negotiators had made some progress on some key issues. Even so, semiconductor stocks remained under pressure as investors questioned whether the AI rally had simply moved too far, too fast. At the close, the Dow gained about 0.25%, S&P slipped 0.25%, and the Nasdaq fell about 1%. Wednesday's inflation report initially gave investors something to celebrate. Core CPI rose just 0.2% during May, below the expectations of 0.3%, suggesting that underlying inflation pressures may be moderating despite elevated energy prices. Treasury yields fell, and many sectors of the market traded higher during the morning. Small cap stocks actually outperformed early in the session. Unfortunately, that optimism didn't last. A government energy report revealed a significant drawdown in oil inventories, sending crude prices higher. Geopolitical tensions also intensified after President Trump adopted a more aggressive tone regarding Iran and that shooting down of the helicopter. Oil prices climbed back above $90 a barrel, and concerns about future inflation quickly returned to the forefront. Technology and semiconductor stocks continued to struggle as investors digested growing questions about AI-related spending levels and the potential impact of several large upcoming public offerings. By the close, the Dow fell nearly 2%, S&P lost roughly 1.75%, and the Nasdaq dropped about 2%. Thursday brought a powerful rebound, markets receiving encouraging news after reports emerged that the U.S. military operations against Iran had been paused and negotiations were producing real progress towards a framework agreement. Investors also reacted positively to rising jobless claims, which suggested some moderation in labor market strength and helped push Treasury yields lower. The Producer Price Index came out hotter than expected, but investors largely looked through the headlines, not headline numbers. Many analysts conclude that most of the inflation pressure remains concentrated in energy prices, linked to the conflict with Iran, rather than broad-based inflation throughout the economy. The afternoon rally accelerated after President Trump announced that planned military strikes he had set had been canceled because both sides had approved a framework for a peace agreement. Stocks surged higher, oil prices fell sharply, and investors once again embraced risk. The Dow gained nearly 2%, S&P rose about 1.75%, and the Nasdaq climbed roughly 2.5%. Friday's attention centered really on one event. We all know what it was: the public debut of SpaceX. The largest IPO in history generated enormous investor interest. Shares opened well above their offering price and finished the day with strong gains, reinforcing enthusiasm surrounding artificial intelligence, space technology, and next-generation infrastructure investments. The successful offering helped lift sentiment throughout the market. Investors also welcomed continued reports that negotiations involving Iran were progressing towards a final agreement. However, one underappreciated theme began emerging beneath the surface. Some analysts warned that SpaceX may be only the first in a wave of massive AI-related capital raises. OpenAI, and Anthropic are both expected to pursue public offerings later this year. Combined with Google's recent equity raise, investors could soon be asked to absorb hundreds of billions of dollars of new technology-related share issuances. While that doesn't change the long-term outlook for artificial intelligence, it could create some periods of volatility as investors shift capital to participate in those offerings. That's what we saw a little bit last week. At the close, the Dow gained 0.75%, S&P 500 rose 0.5%, and the NASDAQ added 0.25%. For the week, the Dow gained approximately 0.75%, S&P rose about 0.5%, and the NASDAQ advanced roughly 0.75%. Small cap stocks significantly outperformed, with the Russell 2000 gaining nearly 4%. The dominant theme throughout the week was the market's reaction to every development involving Iran. Oil prices, inflation expectations then came in. Bond yields, stock prices all moved in response to shifting expectations about whether a peace agreement was getting closer or further away. Inflation was another major focus. While headline inflation remained elevated due largely to energy prices, both the CPI and PPI reports suggested that many of the underlying inflation pressures remained relatively contained. That helped investors maintain confidence that any inflation resurgence could prove temporary if energy markets stabilize. Another important theme was growing debate surrounding artificial intelligence. AI-related companies continue to produce strong earnings and attract enormous investor interest. However, investors are beginning to question whether the market can absorb the tremendous amount of new AI-related share issuances expected over the coming months. Looking ahead, this week will be all about the Federal Reserve. New Federal Reserve Chairman Kevin Warsh will preside over his first Federal Open Market Committee meeting. While markets overwhelmingly expect the Fed to leave interest rates unchanged, investors are going to be paying very close attention to Warsh's comments, the Fed's updated economic projections, and any clues regarding the future direction of monetary policy. Goldman Sachs, for example, expects that the Fed is going to keep federal fund rates in the current range of 350 to 375. They also believe the Fed may remove language that previously suggested future rate cuts, while updating its forecast to show slightly slower growth and somewhat higher inflation expectations for 2026. The market enters the week supported by four major themes that have helped fuel this recent rally: easing tensions between the United States and Iran, declining inflation fears, renewed enthusiasm surrounding artificial intelligence following successful SpaceX IPO, and the optimism that the Federal Reserve may remain patient despite elevated inflation readings. However, each of those themes remains somewhat fragile and could quickly change if investors receive an unexpected headline or policy surprise. Before the Fed announcement, investors are going to receive several important economic reports. Today, we're going to get Empire Manufacturing, industrial production, capital utilization, and a housing market index report as well. Tomorrow is going to get import and export prices, along with housing starts and building permits, providing another look at both inflation measures and the health of the housing market. Wednesday features the most important economic report of the week before the Fed decision. That's retail sales. Goldman Sachs, for example, expects retail sales to increase 0.4% in May, reflecting continued strength in consumer spending. Investors are looking for a number that is strong enough to confirm economic resilience, but not so strong that it reignites fears of additional Fed rate hikes later this year. Investors are also continue to watch inflation very closely. Last week's CPI and PPI reports reinforced the idea that much of the recent inflation pressure has been driven by that elevated oil prices tied to conflict with Iran rather than broad-based inflation throughout the economy. If oil prices continue to decline following the newly announced peace agreement, like they are this morning, markets will become increasingly confident that inflation can continue moving back towards the Fed's target. The Middle East remains another critical variable. Futures are rallying, of course, today, and the markets are up a little bit today to start the week after the United States and Iran announced a peace agreement that would reopen the Straits of Hormuz while oil prices are falling sharply. However, investors will want to confirm that agreement ultimately gets signed and implemented without disruption. It's also been notable that we've been saying that one reason the market was doing so well is that it priced in an agreement already into the market. And today, reacting to that news again. We've seen this before, react many times to the same news. Speaking of same news, the artificial intelligence story will also remain front and center. Last week's successful SpaceX IPO reignited enthusiasm throughout the technology sector and reinforced optimism surrounding future AI growth. However, investors will be watching closely for any signs that enthusiasm is cooling or that concerns regarding AI-related spending valuations or upcoming capital raises begin to reemerge. Markets are going to be closed Friday for observance of Juneteenth, making this a shortened trading week with potentially lighter trading volumes, lower holiday week liquidity combined with several major catalysts could lead to larger than normal market moves as investors react to economic data, Fed policy decisions, and geopolitical developments. So much in the news today, even emerging Monday. So keep nimble, stay focused on your goals and the plan. Have a great week. Please check out the new Friday planning video this Thursday due to the short week. I'll see you next Monday.